What's up, YouTube? It's the Action Figure Grader coming back to you with another video. Every once in a while, I get a little hair up my butt, and I want to talk about something other than what the prices are doing on eBay for vintage Star Wars collectibles. And there was a great video on the YouTuber's channel, Swaggle House. I don't know if you follow him. He basically covers comic books, but he had a good interview about a week ago from a gentleman that I had never heard of that is also a YouTuber named Reserved Investments. And he thinks like I do. I think his name is Sean. He's a consultant for antiques, high-end collectibles, art, you know, all the stuff that we collect. And he had a great interview, about an hour long. I encourage you to go check it out on his channel. I'll put a link in the video description to that, as well as some of the other relevant videos that I'm going to talk about from my own channel. This video will probably be somewhat uncomfortable for some of us to talk about, because we're going to look at the COVID era bubble that happened with collectibles. And for our channel's purposes, we're going to look at Star Wars collectibles and comics, but I want to kind of go back and look at maybe what the causes were for the big spike, the big run up in prices of Star Wars collectibles and comic books. And did we learn anything now that the bubble has popped, as you see in this thumbnail? And did you learn anything? And in the comments below, maybe after you watch the video, I'd love to hear your thoughts about it. Before I dig in any further, I'm going to play a clip from another video of mine from June of 2022. And let me play the video, or the segment from that video. And again, I'll put a link in the video description. But I think it's pretty interesting to hear my words again from June of 2022 before we start digging into some other data as it stands now and what we learned. So let's play that clip right now. I want you to think about how your purchase habits have changed, especially with collecting, over the last month or two or three or however long. Has it changed at all? And my premise, the premise of this video, is that I personally think that we are at a peak in Star Wars collectibles prices. Right now is the peak. June 2022, thereabouts. This is the peak. It might be a little bit longer. We might have just a little bit longer. I don't know. But to me, I think that the writing is on the wall, that everything is going to be coming down. Okay, so you saw the clip from June of 2022 from one of my videos. And again, I'll put the link in the video description. But I do find it interesting that I kind of called a market peak in terms of collectibles in general. And I think the data has proven out right, that I was right in that video. And I want to kind of circle back to where we went wrong in terms of prices for collectibles and why people were spending what they were spending. And I think when we look back at the COVID era, and let's call that December of 2021 to, or maybe December of 2020 all the way through June of 2022. That's kind of like the big window right there, right? Where COVID was first hitting the US and people were locked down and money was flowing and people were bored. They were not going out and spending money. And it seemed like people were pouring money into collectibles as an investment. And why was that? So let's first take a look at where the money was and why people were spending what they were spending. This was an interesting kind of chart that the New York Times that I found just randomly. And it shows you all the stimulus money that, this is for the US, all the stimulus money that was going and where it was going. And if you look at the numbers, the biggest numbers were stimulus checks direct to families, $817 billion. On the business side of things, there was the Paycheck Protection Program of $835 billion. That's really also going towards the end user, the end consumer, who were spending that money. And don't get me wrong, there were a lot of people that struggled during the pandemic. There were a lot of people, though, that had a lot of play money that were bored and were not going out. They were not traveling. They were not going to restaurants, going to live events and things like that. And you can see how it breaks down across some of these other sectors here. And if you want to see it in more detail and kind of freeze frame it, then I'll put a link to this in the video description as well. But the point of me showing this is that there was a lot of money in consumers' hands in the US. And some of them needed it to make ends meet and to pay for groceries and rent and things like that because they were laid off, they were in the service sector or whatever. But there were a lot of other people that maybe had their money set aside for those expenses, and either their job was still fine, or they had this extra money and they didn't know what to do with it since they couldn't spend it as they normally would on other discretionary items. So that's something to keep in mind. And if you look at the inflation chart, this is kind of a chart of monthly inflation. And where was it the highest? Where was it the highest? 9.1% inflation in June of 2022 when I made that video. And ever since that time, inflation on a monthly basis has done nothing except come down for the most part. There was a couple of spikes here and there in 2023, but for the most part, when I made that video saying that collectibles prices are at their absolute peak, that's when inflation was also at its absolute peak. So I think that they go hand in hand. And, demand for collectibles was at its absolute peak. And so that was driving prices up. In addition to the average cost of goods sold, it was going up. So I just think that the timing was so perfect when I made that video, when it ties to the monthly inflation numbers for everything, and since that time, it's come back down. And as you know, if you watch my channel regularly, the prices of collectibles have also come down. So they work hand in hand, and there's a lot of moving factors, right, that have affected things. So along that note, let's take a look at, this is just an example, but I want you to look at these numbers, and if you're as shocked as I am, and you can apply it towards any Star Wars collectible, since this is what my channel is focused on. So I think this is interesting. In June 2nd of 2022, about 11 days prior to the making of that video where you saw that segment earlier, a rocket-firing L-slot Boba Fett prototype AFA 80 Plus sold on Hakes for $236,000. That includes the 18% buyer's premium. So here it is. And obviously this is one of the holy grails for Star Wars collectibles. And it's not, I wouldn't say it's necessarily the rarest Star Wars collectible, but it's the most desired, right? It has the most demand, supply and demand, right? We talk about that all the time. This was a rocket firing L-slot prototype AFA 80 Plus, and it sold for $236,000 at the very peak of the Star Wars collectibles market. And a side note, whoever sold it on June 2nd of 2022, well done, because you timed the absolute peak of the market. Now let's look at this one. This one is also an L-slot rocket firing prototype. It's labeled exactly the same. There might be some variation to it that I don't know of, but at least AFA labeled this. The label is exactly the same as the one I just showed you, except this one is even higher grade. This was an AFA 85. The other one was an 80 plus. This one sold about 6 weeks later, and also on Hakes. So pretty much apples to apples, right? Except it's even higher grade. This one sold for $136,000. So 6 weeks difference. It sold from $236 for a lower grade to $136. Can you believe that? And that is a testament to what I was trying to say in that video in June of 2022, that the peak has happened, and from here on out, prices are going to decrease. And I think that this perfectly demonstrates that. Now, you could argue that this torso has started to yellow since grading, right? It's got a slightly different, yellowish tone to the torso. So maybe that AFA 85 grade doesn't apply anymore. You can nitpick it all you want, folks, okay? But in my opinion, this is a perfect demonstration of what I was trying to talk about. It dropped by $100,000 in price, even though it's technically a higher grade. And again, it's not apples to apples, because maybe you could argue it's overgraded now and that it's discolored since then, blah, blah, blah. But at the end of the day, this person took home $100,000 or more less than the seller that sold it 6 weeks earlier in a lower grade. And I think that now's a good time to, again, preface this video by saying that it's an uncomfortable topic to talk about. But the Swaggle House video, which I encourage you to go see, really digs into it. And it talks about liquid versus illiquid assets. And are these assets, and are you buying as an investment, or are you buying for nostalgia? And I would argue that most of us, myself included, buy this stuff behind me and the stuff that you have in your own collection room as you watch this video. You're buying for nostalgia primarily, right? And there is a monetary value associated with recollecting our childhood at 2023 prices, right? And so that's one thing to keep in mind. But at the end of the day, we are all going to die. Father Death is 100% undefeated, right? We're all going to pass away at some point. And whether we pass it on to our children or whether we divest it at some point there's going to be a market as my age group, Generation X, and maybe slightly before that or slightly after that in terms of age, age generation. I'm in Generation X. I'm sure some of you are, most of you are that watch my channel. Some of you are probably baby boomers. Some of you are probably whatever the generation is after. I think it's Generation Y, whatever it is. So at some point, though, whether it's 10 years from now or 20 years from now, we're going to pass away, or we're going to be starting to look at, hopefully not pass away, but we're going to start looking at what are we going to do with all this stuff that's in our collection room, all this stuff behind me. And there's going to be a significant increase in supply of this stuff at some point. And again, going back to the Swaggle House video with reserved investments, they started talking about how certain assets that were very collectible for previous generations, like baby boomers, like Lionel trains, like certain other dolls or coins or whatever it is that they were collecting during that age bracket or that generation bracket. A lot of those are hitting the market now and nobody wants them. Antiques is another good example. There's a lot of antiques that are hitting the market that people don't want, and they're not getting their money out of them. And so I thought it was an interesting discussion because, we're buying for nostalgia primarily. But I'll say this, right? There are a lot of people that reach out to me privately that talk about, hey, I've got $50,000 that I want to quote unquote invest in Star Wars 12-backs or Star Wars collectibles, high-end Star Wars collectibles like this rocket firing Fett. Do you recommend it, Action Figure Grader? And I always say this, no. The answer is no. If you're buying it primarily for investment, there are much better investment vehicles. And I think this chart is a handy chart that I'm not telling you anything that you probably don't already know, but I think this is a handy chart that a lot of people need to keep in mind if they are considering investing in illiquid collectibles like Star Wars action figures, comic books, coins, art, whatever it is. Those are very illiquid assets, right? Now it mentions real estate in here, and I would argue that yes, you could say that in certain markets it's illiquid, but there's a big difference between real estate and some of these other collectibles, and this is something that was talked about in the Swaggle House video. Does it create passive income? And the answer is yes, real estate creates passive income. The vast majority of my net worth is tied into rental properties. Every single month, somebody pays me for the right to live in that property. That is passive income that I receive every single month, and all I got to do is keep it occupied, and if there's repairs, keep it repaired. It's very, very easy to maintain those assets, and I get monthly cash flow because of it. And because of it, I'm very fortunate, I'm not going to lie, because I have those, but I can reinvest those however I see wish. Those passive income streams, I can either invest those into my children's college funds, which is going to be coming before I know it. I can put it in more common liquid assets like the left-hand side of this chart, like stocks, money market funds, mutual funds. CDs is another really good investment right now. CDs with zero risk, almost zero risk, you can get 5.35% interest return on your money at zero risk right now. Think about that. You're taking almost zero risk for FDIC insured deposits, and you're getting a 5.5% return. I just put some money in a CD, and I'm getting a payment in February. At zero risk, I'm getting a payment of $3,000 from these CDs. That is zero risk, and it's a 5.35, 5.45 annual percentage yield on my money every 3 months, and I can reinvest it as much as I wish. Now, you got to pay taxes on those gains, but it's zero risk, right? Versus putting that money into collectibles, such as cars, rare stamps, toys, action figures, which is illiquid, right? It's a much tougher proposition to sell those, and you got selling fees, whether it's on eBay or wherever else. So this is something that for the novice investor, I need to stress, okay? If you are considering investing in collectibles as your very first investment, or an investment where you do not currently own stocks, mutual funds, or even real estate, it is a crazy proposition. Do not do it. And that's why I tie it back to reserve investments. I had never heard of this YouTuber before, but I love him because he thinks exactly like I do. He views these collectibles, and I think hopefully a lot of you view these collectibles, high-end collectibles, as a hobby, first and foremost, as a passion project, and as a way to tap into our nostalgia. And the investment aspect of it is secondary. If all of the stuff behind me, if all of my comic books got set on fire tomorrow, it would not ruin me financially. And if you are looking at your collection right now and you are thinking, wow, if my house caught on fire and all of my collectibles, insured or not, they all got set on fire, would I be financially devastated short term? If the answer is yes, then you need to be selling your collectibles. That's just a fact of life. And again, I know this is an uncomfortable topic and probably not something that most of you even want to talk about, but I just wanted to talk about this briefly because I think that the run-up in collectibles that we saw during the COVID spike was irrational, and it's not something new. It's something that has happened in the past, and it's going to happen again. And I always go back to Alan Greenspan's quote, and I don't know exactly when he quoted this. I'm thinking it was around 1990 or 1999 or 2000 during the dot-com internet bubble. How do we know when irrational exuberance has unduly escalated asset values? And he was thinking this out loud so people could hear him, because he was thinking that the dot-com stocks from the 1999 to 2000 era were grossly overvalued. And they were, okay? I was in that sector. I was in investment banking during the dot-com bubble. We were taking companies public that had no business being public. Some of those companies had annual revenue that were less than my yearly salary as an investment banker. Think about that. I was a lowly peon, pencil pusher, desktop jockey, and I was making a lot of money doing it because I was working 100 hours a week, right? But my annual salary was more than the companies that we were taking public on the NASDAQ stock exchange. Think about how crazy that was. They were being valued in the billions of dollars during the dot-com bubble. And that is an example of irrational exuberance. And I think that that's what happened during the COVID era bubble, right? And it's happened in the past. It's happened during the 2008 real estate financial crisis. It happened way back in the, whatever it was, the 1700s during the tulip bulb craze or whatever it was. There were people buying flower bulbs and they were trading them left and right, and they were going to irrational prices. It happened during the golden, the 1920 stock market run up before the Great Depression in 1929, where the stock market crashed. So it's happened in the past. It's happened. It's going to continue to happen in the future, but you need to learn from it, right? And a lot of people that were new collectors really got burned. If you were a new collector during the COVID spike because you were at home and you wanted to recollect your childhood for the first time, and you were spending thousands upon thousands of dollars on collectibles for the first time, you got burned. Now, some of us, a lot of us that watch my channel, we were buying before COVID, we were buying during COVID, and we're buying after COVID. And I call that dollar cost averaging, right? We're going to get burned on some of that stuff that we bought during the COVID bubble. I certainly did. I bought a Hakes AFA 85 Poppy Death Star droid set that sold. When I bought it, it was after the June 2022 spike, but it was towards the tail end of it as prices were still coming down, but it was still high. And I bought it for $1,200 something. And recently, another AFA 85 Poppy Death Star droid, Japanese Death Star droid, exact same grade, exact same display, just sold at Hakes for like $750. So that's an example of an item that I bought during that COVID era-esque purchase that has gone down in value. And I certainly have comics, especially the modern comics, where there was an irrational exuberance for a lot of these first appearance comics that I bought maybe during the spike that have since come way back down in value. So But there's some stuff that I bought pre-COVID that has gone up dramatically in value, even with prices coming back down to earth, so to speak. So, for a lot of us, we're buying our nostalgia pre-COVID, during COVID, and post-COVID. But there were a lot of people that had never bought before COVID that really, really got hurt. And I feel for them. I do feel for them. And, we may never see those prices again on some of those collectibles. So I hope that some people learned their lesson and they weren't burned too badly. And I think that it's a good lesson for all of us. And another example of that was Ultimate Fallout 4. This is a modern comic from 2011. This is the first appearance of Miles Morales in a 9.8 grade. Beautiful, beautiful comic that I talk about all the time in my comic market updates. And this book, I'm going to go to the Go Collect page. The highest price ever paid, according to Go Collect, was $4,000, which I actually think is low. I'm pretty sure that there was a sale or 2 or 10 that were above $4,000. I was thinking like $4,600 was the max that I seem to remember. But according to Go Collect data, anyway, we're using Go Collect data, which is not complete. The highest price ever paid for a 9.8 was $4,000. Now, it lists the fair market value at $1,600. That's too high. There's one that just sold on Comic Link for like $1,300. I see them trade hands all the time now on Instagram for $1,200 or less, right? And you can see that price chart, right? Look at those price chart. May 2021, and February, March is where it started to hit its peak. And the comic market started to come back down to earth before I made that video in June of 2022. Really the peak for comic books, and I used Ultimate Fallout 4 as an example, but I think it follows pretty closely especially for a lot of these modern comics, that the price chart is pretty similar for a lot of these books. Really, the big spike in comics really happened in February or March of 2022. And by the time I made that video, it was starting to come back down a little bit. June, July of 2022 was starting to come back down. But I think Star Wars collectibles, especially the toys, there was a little bit of a lag. I would argue that the comic book market, it's kind of a leading indicator, in my opinion, because it's a little bit broader base, right? It's not just Star Wars, and it's not just toys. It's not just Star Wars toys, right? We are a subset of a group of people that likes these stuff. And whereas the comic market, it's a little bit broader. It includes every kind of, multimedia movie and superhero, and Star Wars is part of that, right? So, but I think that's a really good lesson. And, the other thing I want to talk about is that not only was COVID a factor and inflation, broadly speaking, across the entire economy being a factor, I also do feel like there was the concept of more is not always better during this time frame. Over the last 2 or 3 years, we have had more and more Star Wars content, MCU, Marvel Cinematic Universe content, and it's not always better. And I think collectors are starting to wise up that the first appearance of Kamala Khan from the Marvels is not an important book anymore. And that book went crazy. The fact that the Eternals completely bombed was kind of the first stopping point, or the first point. Now, you look at the worldwide gross of $402 million and you say, how can you call that a bomb, John? Well, it is a bomb because it probably cost $250 to $300 million to make. It lost money, right? Ant-Man was another movie that cost $300+ million to make, and its worldwide gross was $476 million. And this is, again, a part of the concept of more is not always better. That lost probably $100 million. The most recent movie, The Marvels and The Marvels 2, both of those books also really got hammered, or both of those movies really got hammered at the box office, and as a result, the comic books associated with it got hammered. And you look in Star Wars specifically, we've had a very sporadic and very kind of mixed reaction, critically speaking, to a lot of the new content that has come out for Star Wars, right? You've had mediocre to decent, the Obi-Wan series. You've had mediocre to decent season 3 of The Mandalorian. You've had mediocre to what I would call maybe borderline good Ahsoka. You've had very mediocre to borderline bad The Book of Boba Fett. And then you had the quite excellent, in my opinion, stellar Andor season 1. So the quality of the content is, in my opinion, is more important than the quantity. And I think fans are starting to realize that there's not enough time in our busy schedules in life to watch all of this content and to buy all of the comic books associated with that content. And Disney is primarily the big driver of that. And you can argue that Disney has, to a certain extent, hurt the Star Wars brand over the last few years, right? And it certainly hurt the MCU brand over the last few years. And are they going to do a hard reset? They're definitely doing a hard reset for the Marvel Cinematic Universe. And they're certainly pulling back on a lot of the Star Wars projects. And, they're going to tighten up their budgets because Disney is struggling after losing all of this money, not only on the MCU and on Star Wars projects, but also on some of the other movies that are not even associated with those big brands. So Disney has already come out and said, hey, we're going to cut back our budgets. We've got to retrench and we've got to focus on quality over quantity. And I think that what you'll see is that consumers will like that approach. But quality always wins, and quantity does not. More is not always better. So, and I think not only is Disney doing this, but I think that in general, moving forward, the collectibles space as an asset class, as an investment, and even for nostalgia, there is what's called the flight to quality. I'm sure you've heard that expression, but basically, what does flight to quality mean? It's the herd-like behavior of investors shifting out of risky assets during financial downturns or bear markets, and they're shifting into high-quality, safer investments. And what do we see that's happening in Star Wars collectibles? What do we see that's happening in comic books? High-end comic books like Action Comics #1, the first Superman, Batman #1, Detective Comics, 27? All of those are still hitting record highs, even in a down market. And, Amazing Fantasy 15, those are still holding their value. They might be coming down a little bit here and there, but they're holding their value and they're still very highly coveted. And what is it happening with Star Wars toys that we follow, right? High grade and rarity continues to win. And the latest Hakes auction had some very high quality stuff, and they still commanded very high prices. And, some of those still hit the upper end, if not above the value codes that we talk about, where Hakes gives a value range. Some of those pre-production prototypes like Princess Leia, they still hit very, very high values, right? So, again, I don't know if this video is necessary, and I don't think I'm really telling you anything that we haven't already talked about in past videos, but it's worth at least kind of looking at your own collections, seeing where you went wrong during the COVID era collectibles price spike, and where you can learn from it, right? And where you can learn to better apply your collectibles budget towards items that will either hold their value or maybe go up in value, or you don't care about any of this stuff at all. That's okay too. And you're buying for the nostalgia, and you're getting there's a monetary value associated with having that item in your collection. And if you lose a little bit of money in 20 years time, whenever you sell it, you're okay with that. Let me know in the comments what you think about this video. And again, I'll put some links to some of the relevant videos that I've talked about in this video in the video description for you to go to check out on your own. Thanks as always for watching, and I'll be back soon.